Fantastic. Happy Tuesday, everyone. Let's get going. I hope everyone is doing well. I hope the audio on the Twitter space is fine. Video here on YouTube is fine. It's just gonna be me today. Fabio is not able to join today here on uh, the call. I think he's listening in on the space itself, but it's just gonna be myself today. Um, Three topics I would love to discuss with you. Obviously, I would love to do a bit of a summary of all the craziness that kind of transpired over the last 3, 4 days. Do a quick kind of boil down on all this. Second, I want to discuss price. What's going on? Why did Bitcoin, why did Ethereum, why did DeFi chain, why did all of this dump over the weekend? Where's this insane pump coming from, especially since yesterday, Monday? And where do I feel this is going to take us, especially with what's happening on, well, in the next week with the Fed? Are we going to see, there's rumors, are we going to see no further rate increases? Are we maybe even seeing a rate cut? Is quantitative tightening, the offloading of bonds, is this going to stop? So, yeah, a lot of questions around this. And then topic number 3, it's exactly what Philip posted into the chat as well here on YouTube. He said, cakeELITE is insane, heart and uh, 2 fingers up emoji. And that's obviously the main topic as well. It's cakeELITE. I want to discuss this. So these are the 3 things. We're going to go in reverse order. We're going to start with cakeELITE, and we're going to go into the macro topics, into the price topics. So yeah, with that, let's get going all this. I just want to do a screen share here on YouTube. On Twitter, I'll share those pictures and screenshots a bit later, so then you can follow that visually as well. But you will see it's absolutely fine if you're just listening in. Shouldn't be an issue. Great. cakeELITE went live yesterday. I had hinted at that about a couple of times, I think, in the last 2 weeks, specifically last week as well with Fabio. We went into the details. And as always, we get right away feedback from our very passionate community. And I want to, again, set a bit the stage, explain what this is all about, who's cakeELITE for, who it's not for, who should rather wait a bit, and who are those that should dive right in. Let's start from our side of view, right? And then let's talk about your point of view as a customer. For me as a company, I would love 3 things out of cakeELITE. I want to revamp our VIP program. It's something that we have discussed several times. I think there's a lot of issues with the VIP program, way too many levels, way too complicated. It has too many things of coming soon. These are all things that are just not good. Also, the current VIP program is based on custom assets, so how much assets you have with us, which is not good because it actually doesn't say anything. It doesn't say anything about how much money you are making, how much money we are making. And obviously, there are some that are taking a way riskier approach, take a way higher return. There's more volatility in a product, which for us also means we may make more money. And then there's someone else who takes a super low risk approach, gets a very, very low return. We basically make zero money or almost lose money. And we have to treat both those customers the same. We don't want to do that, right? This doesn't make any sense. We would really love to value our customers based on how valuable you are. And I think any company would love to do that, right? So those of you that are insanely valuable, we want to give you even more. And for those of you that are not as valuable, we also still want to give you a lot of things, but just in appropriate amounts. I think that makes a lot of sense. So that revamping of the VIP program is an absolute must. It's going to be something that over the next 3 to 6 months is going to happen. And I want to be on really, really clear on one thing, which is we want to do a very fair matching. So what you see right now on Elite, and I'll get to that, is not the final version by no means. I'll get to that. So don't, just because you have a very high VIP level, you feel like you're going to get matched into something and you feel some of the benefits are going to get watered down. The exact opposite is going to happen. So, but I just want to explain that as the first part. The second part that we as a company want is we want to have more predictability. I mean, I have mentioned this many, many times that we would love to go public at some point. Obviously, at this moment with the current market environment, everything, there's not even the possibility of talks for going public, but at some point I would love to do that. For me, this has always been the ultimate success as an entrepreneur, actually bring that company public. And for that, we also want to understand who are our valuable customers. Maybe we can incentivize the valuable customers to a certain extent from our journey of going public, right? But again, there has to be some kind of idea how this kind of matches together. And so this is obviously really, really important. Just as a side note, but at the same time, if you're looking for investors to invest in your company, they always want the same thing. They want to have predictable revenue. They want predictable cash flow. They don't want to have the ups and downs of crypto. They want to benefit from the ups, but they don't want to see so much down. And so the elite program is really going to help there, because yes, it's going to eat a bit into our revenue. However, it's going to make our revenue way more predictable, way more, right? And in return, we're going to lose some of that revenue, because obviously there has to be a trade-off for you as well. I mean, this makes a lot of sense. So we're going to talk about your sides of the entire story as well. And last but not least, 100% of our revenue is coming from crypto rewards, but 95% of our expenses are actual fiat expenses. And so there's this constant flow of us from crypto into fiat. And that's not good. It's not good because we have to sell those things. There's an operational issue to that, right? There's just a lot of issues in all of that. So for us, it just is so much easier if we give you more of the revenue in crypto and we take fiat in return. And hopefully at some point we don't need to do that anymore, but at the moment it's just how the world works. So these are kind of the three motivations from us. So let's kind of flip this around, right? So I have these three things that I need as a CEO in a company. And what are things that you as a customer are going to want? Well, of course, you want great returns. Sure. So the more money we can give you, the easier for you it is to say yes to something. Makes a lot of sense. The other thing, you want great customer service, of course, right? So the better we can do, so the more we know that, the more basically revenue you leave with us, the easier for us it is to give you great customer support. And number three, you are definitely going to want to be treated special. You want to have status, you want to have access, you want to get things that no one else has with a certain level, right? That's why cakeELITE. So this is very, very straightforward. So the way cakeELITE is going to be designed ultimately is going to be to completely reflect all that, right? So that's the ultimate kind of journey where elite is going to have different levels, not just two levels, right? It's going to have several levels. Obviously, the regular tier that we have had all the time is always going to stay, right? So you can just use Cake as you do right now. It's like the just as you go kind of way. But the higher up in cakeELITE you go, the more you're going to make, the more rewards you're going to get, the better customer service you're going to get, the more access you're going to get. You're going to get exclusive product access, and you're going to get a lot of the benefits from the current VIP program. We have some really interesting ideas what to add on top, especially when it comes to getting people together. Obviously, someone who has a completely different amount of revenue in our company, right, is gonna, I don't know, maybe think differently than maybe someone else, right? So I don't know, someone that makes $100,000 in rewards a year, I don't know, it's probably gonna be a very different kind of financially positioned person than someone who makes, I don't know, $100 a year. Doesn't mean it's better or worse. It just means that. And maybe some of these people would love to kind of get together. Maybe there's different possibilities that we have, right? I mean, like if you look at the current VIP program, there was always this idea of bringing people together in Singapore, but it's actually very difficult because someone, and we ran the numbers, right? On someone, it's really crazy, that actually has quite a lot of money with us. We almost made no money on someone like that, because that person, not on purpose, just caused a lot of cost to us. It's just how it is, right? And someone else who maybe has way less money with us is actually someone who is really, really helpful to us from a profitability standpoint. And our existing program doesn't treat people fairly. It doesn't, right? And so that's how this entire kind of matching comes in. So we have this really big plan of what cakeELITE is going to look like. At the same time, we're adding more and more products, right? So cakeELITE is going to be this overarching kind of scheme. And so now the big question is, when you have all these ideas, how do you launch this? And this to me is always such a big lesson that I always see that most entrepreneurs, most CEOs, they never understand that and they never do that. And I think many of you have seen this entire concept around in an MVP. A minimal viable product. Most people, when you talk about an MVP, people always feel it's well, it's like something super basic, right? So you don't give them everything. It's just a little bit of the functionality, and so most people kind of know this entire pyramid, right? Where at the bottom there's function, and then on top there's reliability or security. Then obviously it's usability. Then it's the user experience, and on the very top it's design. And most people know this graph, and I'll post it on Twitter as well, where an MVP shouldn't be just a little bit of the function, but nothing else. So something that's totally insecure, horrible to use, terrible user experience, no design, but at least it has some functionality. But what it should be basically a slice on the side. So it should have some of the functions. So on cakeELITE, this means it should have it shouldn't have all the tiers. It should have a few of the tiers. And in the tiers, it shouldn't have all the functionalities in there. It's going to have some functionality in there. Now, obviously, it has to be reliable. Maybe not as super stable and how reliable it's going to be at the end. But obviously, one thing that can never happen is that people don't lose money, right? It has to be usable. Again, like I mentioned, right now, tier 1 and tier 2 are not going to have all the benefits, all the usabilities as in the future. But so obviously, there's always this trade-off, right? So when we talk about user experience, so that is why right now you're getting the maximum financial benefit. So one thing that you can be sure is the financial benefits you are locking in right now are not going to be the same as in a month's time, in 3 months' time, in 9 months' time, when basically this entire idea of an MVP is going to go into a final product, right? So, because we're going to add the other benefits and we're going to take the financial ones away, especially for the new joiners, right? So that's going to be really, really important. So it's going to be those that support us first are going to be those that have the biggest benefit out of all this, right? And the same with design. And so the absolute and I think most of you know this kind of graph, but it's not as visceral, right? So it's not like, what does this actually mean? And so I found this really nice comparison. That what is actually not an MVP, but most people think it is an MVP, and what is truly an MVP. So the comparison here is, imagine you want to build a car, right? What's not an MVP, but that is what most people kind of do, is they first build the wheel, and then they build two wheels, and then they build kind of the base of the car, and then they build the car. But so actually the car is never usable. So in stage 1, at the very beginning, it's never usable. It's only usable at the very, very, very end. The advantage of that is customers will only see the finished car. There's no real feedback on the wheel, because people see the wheel and they're like, oh yeah, sure. I mean, makes sense. I mean, that wheel is going to go in a car. So that feedback is very, very directional towards the car. The feedback also from internal, right? So it's not only the customer, it's also internal. Internal, that feedback is very straightforward, because people all know, well, the car is not finished. You know, like, I can't use a wheel. I mean, what am I going to do with the wheel, right? And then you get to the next stage, and obviously it's going to improve, and more people are going to see the vision of the car. So yeah, you have way more kind of feedback and so on. The big downside is you have to wait until the car is there until you can actually launch. Additionally, it's very difficult to kind of get feedback from the customers in the beginning of the stages. Why? Because the customer doesn't really know yet what the car looks like. Plus, you kind of take a lot of time. It's super slow. You're taking this full risk. And so the way you should approach this, if you want to build a car, is you start with an MVP. And in this case, it's a skateboard. So it's not the finished product. It has some of the functionality. It goes, right? It has some of the reliability. It has some of the user experience. It has some of the design. It has some of all these things, but it's like just tiny little bit. But you know that there's a car. Now, when you do this, you will always get pushback from the team. And the reason you do is because you hire people who are really, really good. So they are perfectionists. They don't want to launch a skateboard. They want to either have a perfect wheel that's gonna be added to the second perfect wheel, or they're gonna they want to have everything ready. So they want to launch the final car. So what they don't want is that when you talk to them about a car, that they have to deliver a skateboard. And customers, they expect a car, and now you're giving them a skateboard. And that frustrates some customers. Now, some customers, right? Most customers will be frustrated. Some customers understand the vision is the car. And they understand if the vision is the car, I take the skateboard right now because I understand this journey of skateboard to car. I understand that journey. And so because I understand that journey, I will start using the skateboard right now because I understand that skateboard is going to transition into a scooter. Now, the scooter is still not a car, right? It's better. However, I can help and shape that product go from being a skateboard into a scooter. And from there, I can go and turn it into a bicycle, and then it goes into a motorcycle, and at some point, it's going to be that car. The key thing here to understand is that you can have customers from day one or very, very early, which obviously, from a revenue perspective, if you start a business, is super helpful. From feedback, and that's something that you're going to get now as well. So for those of you that have signed up for tier 1 or tier 2, you're going to be contacted by customer support, and we're going to hear from you and say, hey, look, from the existing VIP program, which are the benefits that you would love to have? Now, I understand that everyone always wants everything, right? But so it's interesting to kind of understand what are the benefits you actually want. At the same time, it's going to allow us to say, hey, what benefits would you be scared of that we're going to give you? And you're like, hey, you know what? It's actually bull crap. I don't actually need that kind of benefit, right? Most people always offer that, but it's actually not what I want. And then I can also ask, and I actually work with you. So it's not just theory. So I'm not doing a customer survey with someone who's not using the product. I'm actually talking to the actual customer, right? And it's so powerful. And from there, I can go and say, okay, great. Let's do the next level. Let's do level 3, right? What does level 3 look like, right? So who of you in level 2, who would actually be more of a level 3, and what are the benefits you would expect in there? Who of you in level 2, in level 1 would actually be a level 2? What would you love to see in level 2 so that you actually go into level 2, right? And who of you in level 1 who just want to help us, how can we improve that level? So we can do this. And now we go into basically the next stage, and it's going to improve, right? And improving that, obviously those that join really early, so those that are joining in the skateboard phase, you're gonna want these extra benefits because you're this early adopter. So you should be getting something extra, and you will, right? So you're getting the best deal right now. The deal is gonna not be as great anymore in the future. And so the advantage of that is that while I as a CEO and u-zyn as a CTO, we started with the car in mind, we never know what the customer really wants, right? But I can paint a picture, and we can go and then say, okay, now we're at level 3, great, let's do level 4. And level 4 is like, wow, now we're like really, really far. We're at the motorcycle stage now, right? And so it's like, whoa, we have a vision. We work with the customer, right? The customer, obviously, we always have to find that balance. What do we want and what does the customer want? There's always a balance, right? But so now it becomes this kind of working together. And that the final stage, we get to level 5, right? Which is like, okay, now it's like, it, it, we have all this input. We're way faster, right? Than if we would have just done this. We actually know, not because we did like customer surveys with some weird customers, no, with actual people who use the product and use the service. And so we can just design that, right? And so I just want to explain that to you, how our approach is. And so I told the same thing today to the team, and I want to be very clear. I actually shared the exact same stuff with the team because I think for many people, they're not used to that. There's very few companies who approach business that way. And that's why so many companies fail. That's why so many companies produce stuff that no one ever uses. There's no product market fit. Why? Because so many times the company just thinks they know, but then they don't. So there's always this kind of vision, and then you want to get there together with your existing customer base. And we have a humongous customer base, right? So it would be so good to kind of work on this all together. And that's what I think great companies, great entrepreneurs do. And if you look at, for example, how Tesla does it, right? Tesla does this all the time, right? And that is why Tesla is doing so well. And that is why so many other car companies are not doing so well, because they're not doing it this way. And so on and so on and so on, right? So why do I want to share this with you? Same reason on why I shared this with our team today. First of all, many of you being frustrated that all you're getting is a skateboard, it's not a bug, it's a feature. It's the feature of the entire approach. I understand you don't want a skateboard, you want a car. I get it, right? You want the final elite product. I get it. I also want that. However, maybe my vision for that is a bit different than how yours is. So we need to meet somewhere, right? And we need to work together on that so that we can give you something that you really want so that we get something that we really want, right? That's how the win-win works. So that kind of feedback is a feature, not a bug. At the same time, we're going to try to sift and sort through the feedback, what is just noise that is normal at that stage, but what's going to be the super helpful feedback to get us to level 2. For example, one of the best feedbacks that we have gotten is the entire text feedback, right? And that is something that we hadn't put so much into consideration up front. Of all the things we kind of kept in consideration and that's more of a representation, not the actual like tax issue. So what's really, really important is that in your tax report, it's just very, very clear that your profit, right, only starts after the elite membership fee. Before that, it's not a profit. So your income statement on Cake, if you are an elite, is going to have to show that so that you don't get double taxed, because that makes zero sense. Because the extra rewards, right, the extra boost only happens because you are elite. So you cannot get double taxed. And this is really, really important. So that was feedback that I thought was really, really good already here in stage 1, right? So that was really helpful. Then also, we already got some really good feedback on what are some of the benefits, right, that you would love to see added in tier 1. What are benefits that you would love to see in tier 2? I already got some really good feedback from some of you who are in tier 2 who dropped me a message and said, hey, you know what, Julian, if you could, like, proactively, right, you sent it to me. You said, hey, if you could offer me something where I give you $10,000 a year and you give me more than, like, you give me a booster on top, I would take this in an instant because I have so much money with you guys. I would love that, right? And so that approach is so powerful because it kind of goes exactly in this direction. So now I can talk to you and I can say, okay, look, how much would you give us and how much would you want in return? What other benefits do you want? Let's find a win-win here, right? You understand our motivation. Our motivation is very crystal clear. I want to build a business that's sustainable, right? That when crypto prices go up, I want to have a cut in that, but at the same time, I want to have a predictable revenue. I understand you're going to want some extra stuff in return. You want a great partner. You want a trustworthy partner. You want transparency. Let's find a win-win. Makes so much sense, right? And so this is where the really great feedback comes in. The feedback that doesn't, that for me is just noise, and that's just key to learn. If you're starting a business, you need to learn that, right? Sometimes in a team, this is important. If there's now just complaints that this is not a car, it's just a skateboard, right? So, this is just like the benefits here, they're completely irrelevant. Like, who cares about the elite? It doesn't matter. That is the noise. That's absolutely a feature right now, right? So you need to understand that it's not the bug. So I also want to be clear to you. If you want to help us give you what you want, you need to understand to give us right now what we want. And what we want is not judging on the current stage, understanding the bigger journey here, and understanding where we're ending up in all this, right? And then it gets very, very easy to kind of work together so that we can provide to you all the things you want, and in return, we get what I want or what we want. So I just want to explain that, so you understand a bit of that journey here. This is basically step 1 of 5, 6, 7 steps in all of that. For those of you that are already elite, and there's really a lot of you, actually, it was crazy. I had this internal kind of goal: how many elites can we get in the first 24 hours? And actually, it went over my goal. So I was very impressed how well actually we kind of hit the skateboard kind of stage. I was actually quite surprised. Actually got me a bit thinking, maybe we should have launched even earlier, right? Maybe it shouldn't have been a skateboard. I don't know. Maybe you should have done something even earlier, maybe. Because obviously you want to launch early, you want to launch fast, right? So it kind of got me thinking a bit. So, but yeah, really appreciate it. I appreciate the support. I appreciate the trust. It will actually only get leveraged from here for you. So for those that are turning elite, either tier 1, tier 2. You can also upgrade. You can always upgrade down the line. So once we add a level 4, level 3, then a level 4, you can upgrade. You get the credit for the existing payment, right? So all this, if you are interested in working with us on this, then reach out to community, right? Reach out to Fabio, reach out to Ferhat, reach out on CS, Fabrizio, Ivailo. A lot of people really care to provide you a really great experience. What are the benefits? What are the incentives you would love to see? Now, I understand, and I mean, I'm not asking you all to be reasonable. I know sometimes people are not reasonable, but for those of you that think you are reasonable, what's the traits here, right? What do you think do you think you would love to see, and what are you willing to kind of give up in return, right? Where's that trade-off, right? So that would be very interesting to understand. How can we make that program so that you feel like, wow, this is truly elite? I really love that. What are the benefits you want to see, right? And so we have a lot of ideas. My plan is that we have the final car by Christmas. So that's what the team also knows. So we have about 10 months, right? So that's kind of the timeline. So by Christmas, the program should be finalized, right? So yeah, probably we're gonna see, like, that's what you're gonna see. I don't know if you've ever seen a Tesla, or like if whatever phone is probably a better example. You're gonna see constant updates to that program, right? You're gonna see constant feature updates added, improvements, a lot of it on feedback basis, right? So that's gonna be really helpful, obviously, for us from the team side. So just like a phone, right? Software updates, it's going to be little add-ons on top, and so on and so on and so on. And so, yeah, for those that join that program now, you're going to get the best deal out of all of this. Doesn't matter if it's level 1 or level 2. I understand. Not all of you are going to be right for level 2. I get it. Just like not all of you are going to be level 3, level 4. That's why it's elite, right? I hope you understand that. But one thing I can assure you, you will not get better deals down the line. We're going to do the exact same approach how Tesla does this, for example, where if you buy a car really early, you get free supercharging, you get free connectivity, and so on. And it's going to be the exact same approach on this here as well. Yeah, these base principles are, I think, absolutely essential. So that tech stuff, yes, we're going to solve that. So you shouldn't have any issues on that, because there were all these calculations where the tax didn't make any sense. No. You're only going to pay tax on profits, right? Very clear. And I know that there were people already saying, oh, this is, you don't pay taxes on profits, you pay taxes on revenue. That's totally incorrect. Makes zero sense, right? That is absolutely not true. So your taxes are on profits, and so we're going to be very clear in the documentation there that you can see this, so that from a taxation standpoint, you have all the documentation, so that if you get a reward booster, you actually make money, not lose money, because everything else doesn't make any sense. The other thing, one really good feedback, right? So here's, I really, so I'm not going to talk about the feedback that's useless, because I don't like focusing on this stuff. I'm just going to tell you most of the stuff like that I see is noise, right? When people are like, oh, this makes no sense, or oh, who cares about this? This is noise, right? Again, I understand. Everyone, I promise you one thing: by Christmas, everyone who makes, I don't know, probably $10 in rewards with us on a monthly basis, or more, is going to be part of Elite, because the benefits are going to be so exciting. You're just not going to get the same kind of incentives as someone who joins Elite today. But and I mean, someone who makes $1 a month in rewards, maybe also interesting for you to be part of Elite for some benefits, but $10 upwards, I think it's absolutely no-brainer. You will see. For those where it's less, maybe on some things it makes sense, but that's kind of the entire kind of plan. So you understand this as well. So those that make $100 a year, for them, I think upwards, absolute no-brainer. You're gonna actually lose out if you don't do that by the end of the year. So you will see. So now it's 10 months of getting there. Good feedback was the naming was not so good, in a sense where one was a monthly and the other one was annually. I thought that was really good feedback, because actually it's tier 1, tier 2. And yes, the payment is, one is monthly and one is annually. And yes, we already got that feedback where it would be good, for example, to do tier 1 also in an annual basis and kind of lock that reward in. That's something we're gonna be adding at some point. Yes, you will also be able to upgrade. So I can assure you one thing: if you make an earlier decision, we will never put you at a disadvantage further down the line, right? So if we're going to add an annual option, then yes, we're going to let you upgrade from monthly to annual so that you also get that. We don't have that right now. It's not going to happen in next week. I can assure that to you, but it's going to happen down the line where we also going to get an annual option. So the naming here, we're going to work on that. So that was really, really good. Obviously, also the taxation part, that was really good. And the other thing is, obviously, you're going to see more and more benefits being added to tier 1, tier 2, and then we're going to be working on a tier 3, tier 4, and let's see where this journey is going to take us over the next 9 to 10 months. Another note, let me see. One thing you will definitely not see, you're not going to see any coming soon, right? So that was, I think, one of the big issues on the VIP program. There's a lot of coming soon, and I understand this drives everyone insane, so you're not going to see this. There's one calculation issue right now. That issue is being resolved. That's on the freezer rewards. So yes, on the freezer rewards, you can actually get 4 or 5 times the rewards with the reward booster. So that's possible. That is not calculated correctly right now. Thanks for that feedback. We are fixing that. You're not going to lose out on anything, right? So we're just going to retro credit that. Don't worry about this stuff. Thanks for the feedback. This is really, really helpful. We missed that on the freezer side of things, but it's definitely going to be included for those that have noticed that discrepancy. That's going to get fixed. And then obviously the other thing on the move over from the VIP program into the current elite program, there will be some grandfathering in, right? There will be some shifting in, but yeah, I can 100% promise you that this is the direction everything is going to take. For a very, very simple reason, as I'd mentioned up front, it's going to solve all our problems, and at the same time, it's going to solve all your problems. So that's going to be, we're also going to be looking into different payment options. We're going to look into that. One option that obviously people are going to ask, but I just want to also explain to you why I'm going to be pushing back against that, is to be able to pay with crypto. The reason why I'm going to be pushing back against that is because I don't want you to have less funds on our platform. I want you to have more funds on the platform, which makes sense, right? Because otherwise I'm just cannibalizing the assets. That makes no sense. I don't want that, right? So with Elite, you're constantly adding more assets to the platform because you're getting more rewards, right? So of course you can withdraw them, but so taking existing crypto is a bit difficult because you're cannibalizing basically yourself. But I hear the feedback on bank transfer, obviously, especially when we have higher tiers, right? For example, let's say we do a couple $1,000 tiers on tier 3. Not all credit cards can handle that, so maybe there we need a bank transfer. That's absolutely fine, right? So these are things we're going to be looking into. So that's, again, the scooter stage, the bicycle stage, the motorcycle stage. So yeah, I hope that kind of explains that. And so all this feedback, super valuable. We really appreciate it. We hope we can implement as much as possible, and we're going to be working side by side in all of that. So yeah, very much looking forward to that. So yeah, you can just go to cakeELITE, take tier 1, that's $10 a month, or you take tier 2, this is $1,000 a year. You're gonna get a massive reward booster. For example, on the annual one, you get 2.5 reward booster. It's capped at $100 a month. We cannot do this unlimited. I mean, some of you suggested, why don't you make this unlimited? I mean, yeah, I just want to be very clear. I mean, some of you were quite funny who were like, oh, this is not going to work out. This is a total scam. And to me, this is just kind of highlighting how some of you actually have no freaking clue about DeFi and about how all this works. So I don't know. If we would run out of money, like we would be bankrupt if we make this unlimited. You're right, right? Because there is a cap that makes it calculable for us and for you. Otherwise, it wouldn't work. So yeah, I can assure you, the elite program works for us. It works for you. It has incentives for us. It has incentives for you. That's how that win-win works. And yeah, we're gonna try to balance that more and more, where we give you even more of those incentives that you want, and in return, we get more of the incentives that we want. Great. I think everything said and done around Elite. Head over and become cakeELITE today. With that, let's go to topic number 2. let's go and talk about macro. Let's kind of summarize the events over the last 4 days that kind of started peaking together. I'll give you the more factual version first, and then I'll do a little bit of a tinfoil hat conspiracy theory kind of version that maybe is a bit like gets spread too much in crypto, maybe doesn't get spread enough. Could be. So let's kind of summarize what actually happened. So mainly three banks in the US, Silvergate, which had these issues with FTX also, but also did a lot of banking for other crypto companies, Circle, Coinbase, and so on. Silicon Valley Bank, they were actually the main one because they are at a top 20 bank in Silicon Valley. A lot of crypto companies had exposure with that bank, and they were actually the main kind of domino in all of that because they had over 200 billion in assets that were at risk. And then also Signature Bank in New York over the weekend, all had massive liquidity issues. So from what we know today, this is also important, there was no actual bankruptcy. There was no, we don't have enough assets in comparison to liabilities. It was an illiquidity. So they just weren't liquid. And that caused a typical bank run. So how does this happen and what actually happened? Well, what banks normally do, they play an arbitrage on getting cash in, always giving you the short-term availability, giving you some incentives on why you put that cash in, right? So there's some incentive to that. Different, and I mean, some of the criticism that, for example, Silicon Valley Bank had was that their incentives on why startups and funds and so on put money into their bank was a little bit on the financials, but also because there was so many other services around, or they didn't do all the due diligence checks that maybe another bank did, right? And that was a bit of my criticism that I had with kind of bailing out all the depositors, but that's a bit of a different kind of story, so we're gonna get into that. But so just so you understand its functionality. So I get this short-term kind of money. At the same time, me as a bank, I need to make money from that. And the way I would normally do that is I would deposit that into long-term lockups. Why? Because if I lock up money for a longer period, I tend to get a higher return. And that's what all these banks kind of did over the past years. They got a lot of money. In general, it was fund inflow. So the fund flow was this direction. So short-term money coming in, paying out a smaller return, and then me making money on long-term lockups. So what you would normally do is, because you want to play this risk-free, you go and do this with you basically loan the government money. So you buy treasuries, normally longer dated maturities, 10 years and upwards, where, I don't know, 1.5 years ago, you would get around 2% and you didn't have to pay anything out to those short-term holdings, right? So you had a 2% margin. Basically, you thought risk-free. Now, what happened? What happened was, and these three, I mean, Silicon Valley Bank really had horrible risk management. I think this is absolutely ridiculous in a sense here. The other two, Silvergate and Signature, are why they got targeted so much. A lot of people say it's because of crypto. I'll address that. But actually, Silicon Valley Bank really had this risk mismanagement. They used to have this kind of fund flow. A lot of startups depositing a lot of money because they got a lot of money from investors. So there was constantly fund inflow, not a lot of fund outflow. And it didn't matter that a lot of funds went into these longer term securities. But obviously, over the last year, this turned around. Startup funding completely dried up. Startups became net withdrawers from their accounts, not depositors. And now comes the crazy part, the yield curve got inverted, that the short-term money started yielding more than the long-term. And that's called an inverted yield curve, something we've discussed a lot of times here. And every time the yield curve gets inverted, there's issues. Now, to be frank, right, I think very few people about 2 months ago, there were people 2 months ago who kind of blew the whistle on all that and kind of said, hey, there are some issues at Silicon Valley Bank, but this was really kind of individualized. And if you'd asked me 2 months ago if I would see any issues there, I would have also not said I don't see any issues. I always think there's different levels in all of the understanding in this, right? So I do understand all of this really, really well. However, I would not be at that level. So that's a definite level above me of someone who actually goes around and starts poking into stuff to kind of see these issues come out. I'm at none of that level. I'm at the level, if you present this to me, I instantly understand that. However, I would not be able to proactively go and say, okay, this is what's happening. These are the issues that could occur. Let me poke around. So that's a total different level above me. And then I know people who don't only do that, so they're like a level, like another universe above me. And then there's actually people who are another universe on top of that, who not only understand these things, who can poke around, but who also know all these people. So these are the people who are making shitloads of money in this because they really understand how to play that. I am by far no one who can understand this well enough from a proactive approach. I can understand this on a reactive approach, but not on a proactive approach. But so basically what was started happening over this past year was net withdrawing from the deposits. So people were taking money out, and these entire treasuries, so these entire long-term loans had dropped in price. And this is something, for example, I wasn't aware of that. I was really only aware of that over the weekend. I didn't know that this was the accounting principle. To me, that's ridiculous. These banks don't have to what's called mark to market. So they don't have to mark the value of these things on what they're traded on the market, as long as they are just saying, we're not going to put this up to the market right now. We are holding them to maturity. So all these bonds, we're just holding them until the end. And because we're holding them until the end, I don't have to mark them mark to market. I just put them at the final price. So I can keep them at face value. So it doesn't matter if these bonds actually drop by 20%. So if I had to get out right now, I would have lost 20%. I don't have to do that as a bank. I can just mark them as at face value at the end. And so that's where this entire concept of being illiquid but not bankrupt comes from. Because on their balance sheet, they did have enough assets to kind of cover all the liabilities, but there was a true bank run because the banks could have never withdrawn all these long-term maturities because they would have lost 20% and they would have been bankrupt. So they became illiquid, and this was a typical bank run. So this went super, super fast. I think they could have done a way better job. Silicon Valley Bank really also, in my opinion, last week, I kind of looked into this a bit afterwards over the weekend because I wanted to understand how did this even happen. They should have done a way better job in their fundraising. I feel their fundraising was just so dodgy and so weird. There were so many red flags in how they kind of phrased it and what they kind of pointed out. And I think that's where people just got really worried. And then obviously, then you started having this true kind of run where everyone just had to be first and everyone was withdrawing money. And then on Friday, it just became very clear that they couldn't meet all these withdrawals. So now what happened? Over the weekend, the Treasury decided to guarantee in liquid cash the face value of these long-term maturities. So banks don't have to sell their bonds. They can just get access in collateral of those long-term maturities in cash so that they can guarantee all the depositors their money. And some people are calling this a bailout. Now, I want to be clear, this is not a bailout of the banks because the security, the share value of these banks and the bonds all became worthless or close to worthless. So there was no bailout of these banks. There was a bailout of the depositors. And this is now where I see a criticism in bailing out these depositors. And I know this is going to be very controversial. I was supposed yesterday to actually be on a podcast within the US about this topic. And I told the host up front that this is my point of view. And I said, look, I understand this may not be the right time for this point of view because I know that many startups, many companies right now are just going to be happy to get their money and people are just going to be worried in general. So I'm not sure me coming with like this very straight shooter kind of mentality, I'm not sure if this is the right thing. And then at the end, we agreed I'm not going to do the podcast because I just thought it was the wrong place, the wrong time. And I just said, look, I can just do it on my own channels. It's all fine. My opinion, that is, all these companies, right? They knew what they were getting into. They knew that their accounts were backed up to $250,000. They knew, like everyone knew, and I know founders in the Valley who just know that the Silicon Valley Bank is not at the same level as many of the other banks. Everyone knew that. Why did they still use it? Well, it's very simple, because they were just so easy and open about it. Their compliance was way easier. The additional services that they offered around the corner were just way more interesting. Sometimes they would take some of the funds, actually invest them into the companies themselves. To me, that's crazy, right? So you take the deposits, you take some of that, for example, 1 or 2%, and you invest into the companies themselves. Absolutely crazy, right? Companies knew that, right? VCs knew it, but because the entire game was working, they just played it. And to me, this reminds me of how we do it in crypto, which means you have so many people in crypto who just went to companies who are completely intransparent, right? Who went to Celsius and BlockFi and HODLNOT and Nuri and whatever, completely transparent, black boxes. Why? Because they offered them more returns. They just said it's gonna work. There's no transparency. You had to trust because you couldn't verify it. These companies did it because it was so difficult to actually do this fully transparent, and also because they just repackaged a lot of this stuff. And then what happens is, well, all these companies go bankrupt. The customers knew it. Afterwards, of course, everyone is like super shocked. I understand it. And in crypto was also a massive shock. I get it. Now just imagine this. Imagine all the customers in the crypto space would have been made whole. Now I understand from a customer perspective, I would really love that. And I think that would be so good. And it's the same as with the depositors at these banks. But what about capitalism? What about being a libertarian? What about bad decisions leading to bad consequences? That is where I totally come in, and I'm like, hey, look, we as a company, I don't know how hard we work on with the audit to get the bank accounts to document all this. Why did the other companies not do this? Did they do their audit? Do they have all these things? Why do they not have proper proof of reserves? Do you think that's like that comes for free to do that? Do you not think we need a lot of engineers to do that? Diversifying everything. Do you not think in 2020 and 2021 selling all our crypto profit into dollars? Do you not think there was a lot of pushback? And do you not think that this safety approach is not super crucial? Now, just imagine everything would have just been undone. To me, that's where, because I know the stories in Silicon Valley, read up on it. Giannis Antetokounmpo, one of the most famous basketball players, he understands the $250,000 cap and went and just deposited all his money into 50 different banks. So he could go with $12 million and everything is FDIC insured. Why does he do it, and why do the companies not do it? It's very simple. It's just laziness. It's just doing it. And I understand it. Look, I would have probably also made that mistake there. I'm not saying, but so what about all those companies who jumped through extra hurdles and got an account at a better bank, who wasn't affected, who had to maybe do 60 other things, who didn't get as good deals, who because of that didn't get an additional investment or didn't get the extra returns? What about them? Where's the survival of the fittest here? There isn't. This is where capitalism loses, and that's where I have this massive issue. However, now let's flip this around. I 100% believe it was the right decision, because you actually saw still Monday and still today, Tuesday, the ripple effects of the uncertainty that people now have, because they all sit there and say, hey, maybe this entire fear that happened in Silicon Valley Bank and Signature and in Silvergate, this could happen in my bank as well. Because my bank, and look here, you can see a statistic, right? These are all securities that are absolutely in a minus, right? And a lot of them are just held to maturity. So these are held by financial institutions where they just say, look, I can count them at par, even though they're down 20%, but it doesn't matter. So as long as no one comes and wants their money, I'm totally good. And so now people obviously all worry. And so that is why I completely agree that the Treasury had to step in. I think it was the right decision. It just frustrates me because it actually is gonna. I don't know if you've ever seen The Big Short, right? It's like stupidity fueled by greed. And that's really what it is. It's the same thing there. And it just and it just makes it really, really tough, right? And it kind of shows the issues in all of that. Now you can say, look, at the end, a lot of startups survive because of this, and they're gonna do net positive. Hopefully. Still, that is where we are right now. So to me, the shocking part in all of that, and I want to be dead honest, obviously we have seen complete depegging of USDC down to 84 or 83 cents, because USDC had about, Circle had about $3 billion with Silicon Valley Bank. So we saw complete depegging of USDC, a lot of fear over the weekend. Then it repegged, and Bitcoin had exactly the same kind of move. Dipped down, that was really exactly on Friday, Saturday, completely down. And then yesterday, Monday, price shot up. Today it shot up to 24,000 something. And so obviously the big question now is, where's this pump coming from? The drop, right, to me, and I posted this on Twitter, to me it's shocking just to see how bad Bitcoin as an asset performed over the weekends. It was so fear driven, right? Gold held up really well. Gold actually sold off in the last 24 hours a little bit, but Bitcoin really couldn't hold up, and most cryptos completely sold off. Um, and to me, this is not unexpected. I mean, there was so much fear, you didn't know anything anymore. To me, it just kind of highlights um, that Bitcoin is probably not the asset if one bank fails that you want to hold, right? You probably want to hold Bitcoin if everything fails, but not if one bank fails. And probably you and I weren't really impacted by that, right? I don't know anything over the weekend changed for you. If you weren't banking with Silicon Valley Bank, probably nothing. So for most of the people in the world, nothing happened. And that's why Bitcoin didn't like pump, right? But if all the banks would have gone down, I think that's when the Bitcoin price would have done way better. And I think that's what we're seeing right now. So I think right now, crypto's pumping because of mainly two reasons. First of all, it's massive relief, right, on what's happening. And obviously, this hope now that in 7 days, when the next Fed meeting is, maybe we're not going to see another interest rate hike. The market was actually pricing in anything between 25 to 50 basis points. So maybe now we're not going to see any interest rates go up, because that would have dramatic effects on these kind of balance sheets. So maybe the Fed is going to be more cautious. People are even talking about maybe we're going to see a reduction. Me personally, I really hope we're not going to see a reduction. I really hope we're going to see maybe the 25 basis points or 0, or we're just going to pause. I'm fine with that. No reduction. I think that would get us into stagflation. We're going to go into this no lending scenario that so many times we've discussed. That would be nightmarish in my opinion, because we're going to see rally, dump. Impossible to trade. People are always going to be caught on the wrong foot. It's going to be nightmarish, right? But so obviously the market expects that. The other question is, are we going to see a stopping of the quantitative tightening where bonds are actually being sold off, which would increase that price pressure? So it would not be positive for the price, right? So maybe the Fed's going to say pausing of quantitative tightening until like the next 6 weeks when the next announcement is, and no rate hikes. I think that would be insanely bullish. I think the market would rally, and a lot of it is priced in right now for that. I think the market really hopes that. I would actually believe that this could be very solid as a whole, right? So, like I mentioned, you want to be dollar cost averaging right now. The reason I'm personally dollar cost averaging, that's me personally, right, into DeFi chain and Ethereum, is exactly because of that. That's also why I'm dollar cost averaging into some stocks, because of that, because I don't want to be left behind if the market now rallies. Now, I do see still a lot of these clouds at the end of the kind of horizon where I'm like, okay, maybe this is not as easy as we think this is going to turn out. So I think this is really important. I do think also crypto. So one is the relief, just that we didn't collapse. The other one is just really this hopium that maybe we're going to see another kind of quantitative easing kind of move, even though it's not really quantitative easing. So that's just where all of this is coming from. Now, obviously, if we had Fabio on the call today, we'd be like, "Oh, this is the 30,000 new circle high, like cycle high incoming." So I'm missing a bit of his optimism in all of that. So I'm generally more of the not a pessimist, but like I'm way more cautious, right? And a lot of it just has to also do with my role as the CEO. I mean, I want to be optimistic and I want to be aggressive, but I get paid to keep the ship afloat and make sure that 170 something people get their salaries. We build great stuff. Your funds as a customer are there, right? And so I that's what is my ultimate kind of responsibility. So yeah, I do see reasons on why we could pump in the next couple of months, right? So I just wanted to be very clear on that. Maybe the one last thing that obviously you hear a lot out there, especially in the crypto kind of space, there is some weird coincidence with Signature and Silvergate Bank, because they were obviously very crypto heavy, and Silicon Valley Bank, which also had a lot of crypto companies. And so knocking those three banks out is quite telling, um, especially because none of these banks were actually insolvent. They were illiquid, right? You could have kept them running. They didn't have to be shut down. They could have just kept running. It's all fine. But putting this massive pressure on them just forced them to shut down because they weren't given that same kind of lifeline that they should have been getting in order to survive. And so I do understand where a lot of crypto Twitter is coming from, that they are now saying this is a pure attack on crypto. And I do agree. It is an attack on crypto. The question is just how deliberate is it, or how much is just more collateral damage. So I'm not 100% sure on that. I do see the arguments for both sides. I'm not much of this tinfoil kind of conspiracy person, so I generally give people the benefit of the doubt that it's not straight away like an attack, like a straight attack on crypto to kind of destroy it. It just is a bit of a weird coincidence. Um, Now the question is, where do we go from here in all of that, right? And we're gonna keep seeing the same kind of thing. If you remember the meetup I did here in Singapore together with u-zyn, beginning of February, so like 6 weeks ago, we talked about that, right? We talked about the dominoes. And those dominoes, they keep kind of wiggling, right? Now the Silvergate domino has completely fallen. Signature domino, which was not on my radar at all at the beginning of the year, has fallen. There's two major dominoes still standing: Binance and Genesis slash Grayscale slash DCG. And I mentioned this so many times. I do believe the Grayscale DCG Genesis domino is not going to be standing by the end of the year anymore. I mentioned this so many times. I think on Binance, it's going to be very interesting. I mean, new allegations over the weekend, right? Money laundering, not doing AML, and so on, right? So very concrete kind of attacks against Binance. They're not going to stop. Not having these on ramps right now is definitely not something that's as positive as before, right? I mean, this is not positive. If people think that this is positive, I don't understand where this is coming from. I mean, you want as many on ramps as possible. Now, us, we are not impacted from that, but obviously we are not the biggest on ramper in the world. Now, to be fair, it's actually something that got us thinking now a bit, and maybe kind of looks into how maybe there's now a gap in the market that we can fill from everything that we have and do and offer, right? But it's also, I don't want to have a target now back on at the same time, right? So it's kind of a bit of a two-sided kind of sword. So um but that's key, right? Then the entire macro environment, nothing of that has changed. I mean, it's gonna be very, very complicated. Imagine if now money printing kind of continues again, we're gonna see massive inflation again, right? We're gonna have this stagflation scenario. This is gonna be horrible for investors. Like, it's gonna destroy so much wealth because people are always gonna be caught on the wrong foot. They're way too bearish right now, right? Where probably, I mean, I know that what's his name, Jim Cramer, always comes out with his weird kind of calls and says, you should sell this Bitcoin rally and you should go long Tesla. I do hope he's right on Tesla, that Tesla keeps pumping, but I do hope he's wrong on the Bitcoin rally getting sold off, right? So yeah, so I do think though a lot of people are being caught on the wrong foot here. Now imagine the price keeps going up, and there's a good reason on why it could go to 30,000 right now with everything going on, right? Anticipating next week. A lot of people are short or are out of the market. They're waiting, right? Now it hits 30,000. Then there's next Tuesday where maybe the market is very bullish, right? And it's like, hey, now we're pausing. We may even think about cutting rates in the next meeting in April, or actually it's beginning of May. So you're going to be like, whoa, okay, I need to get into the market, right? But maybe that's the point when then the market goes too high and the Fed says, sorry, we're gonna be cutting rates. We're gonna be increasing interest rates, right? And suddenly the market goes the other way. So very, very difficult. Keep dollar cost averaging. Get cash flow on your assets. Stocks, crypto, whatever you're holding. Cash flow is king. It is. And I'm not saying this because I'm the CEO of a cash flow company. I am the CEO of a cash flow company because I believe this fundamentally, right? Scratching my own itch here. I want to be very, very clear on this. So these are just things that are fundamentally important. And yeah, it's definitely something to kind of watch out for. So yeah, 3 things: cakeELITE, get your tier 1, tier 2 now. The entire banking stuff that's gonna stick with us. We at Cake, we're gonna be navigating that as good as possible. We are also adding Euro C today or tomorrow. I'm not sure the exact day, probably tomorrow. So there's gonna be some possibilities there. So to kind of diversify a bit away from the dollar, go more into the euro. This could be interesting. There's going to be more and more products, more and more ideas, more and more services. And then, yeah, on the price, don't make yourself too crazy with all that. So, yeah, that's it. That's all. Next week, it's going to be back with Fabio as well. We're going to be reflecting a bit on a bigger scale. And hopefully, we have some positive kind of reflection on this. So, with this, all the best in the meantime. Thanks so much for tuning in. I hope this was valuable. And then I'll see you next time. Yours truly, Julian. Bye bye.